Well, another sensational day here in Adelaide, and the weather's absolutely textbook perfect. The elections are behind us and it's all absolutely go, go, go on those open inspections. Now today we have Craig James, the Chief Economist for CommSec, speaking to us about housing affordability. You'll also head down to Brighton, where there's a 3-storey building complete with a lift in SA's finest. Remember, we are live and interactive, so be sure to call us or email now to have your questions answered at the end of the show. And it takes a segment on TOOP TV to actually take the time to go down onto the banks of the Torrens and look back over our beautiful, magnificent city. It's just a beautiful place to call home. Now, the elections on the weekend behind us, thank goodness, they're out of the way. Well, mind you, it's not completely out of the way, we're still waiting for that result. But it is great to have that behind us. We're starting to get some plain sailing out in the market. It has been busy and stayed busy right through that period, which is unusual. So the market must be, fundamentals must be excellent and be very strong. Now later in the program, we have a very interesting segment with the BBC here filming our properties in Adelaide. Really interesting, so stay tuned for that. And the inside story, which we'll go to now, is why is the big end of town, the top end of the properties, having a resurgence of activity and making a serious comeback. So let's go and see what's happening out in the streets right now.
I think top-end properties are making a comeback in the market because people want to buy houses before the prices jump up again.
I think loans are a little bit easier to get, but it's a matter of what you really want, really looking for, whether you're looking for that type of accommodation.
Because they were scared off by the global financial crisis, and I think now they've got their confidence back to buy real estate.
Interesting, getting some varied comments, and now things are really tracking pretty well at the moment. Now, we wanted to today cover off on a little bit more technical aspects about property. We're going to cover something called tax. Some of you would have heard a lot about, but we're having a different look at tax at the moment. The capital gains tax and some fascinating rulings that I was not aware of until we had this catch up with our guest. And our guest here is Grantley Stevens, and he is from Edwards Marshall Accountants. And joining me, welcome Grantley.
Good afternoon, Anthony. How are you?
Now, before we just get into the serious side of what we're talking about, the weekend footy.
Oh, I can't wait, Anthony.
You're a footy man.
I am. Sunday, 12:40, Football Park. Expect all the Power supporters to be down there.
Now we know now that you're a footy supporter and you're backing the Power, the mighty Power. But what about Grantley Stevens in terms of accounting?
Yes, well, Grantley Stevens as an accountant. I'm partnered at Edwards Marshall Accountants. We're a mid-sized firm. We're the experts in tax, and that's just capital gains tax, fringe benefits tax, GST. But we've also got a very strong audit division, forensic, and a financial planning division.
Right, so today for the listeners, we want a very simple version of what capital gains tax is all about.
Capital gains tax does apply to any asset, essentially. So for your viewers at home, capital gains tax applies to any asset they purchase and then they sell. If they sell, make a profit, capital gains tax will apply.
So if it was a single person with a property, or maybe they had 2 or 3 properties, explain to me what the liability that they should be aware of.
The liability is calculated based on the capital proceeds less the cost base of the asset. The tax on that gain, is assessed as 50% of their tax rate. So if they're paying tax at 46.5%, they won't pay any more than 23.25%.
So they've only got the one home, it's exempt?
Yes, if you only have the one main residence and you live in it, that is exempt for the period you live in it.
But if you rent that property out or you have other rental properties, you effectively pay the gain that you've had from the purchase price plus what else is involved in the formula?
Yes, if you rent out a property, there's actually some quite interesting facts, because you can rent out a house for up to 6 years. So for example, if you move out of your house and you decide to travel, perhaps go overseas or move interstate, you can rent out up to 6 years, rent out your house, your main residence, for up to 6 years, and the house will be exempt from capital gains tax.
Right. So essentially that's your principal place of residence. You move out, put a tenant in there, providing it's not over 6 years, there is no capital gains tax. Once you go...
Exactly, as long as you choose not to have any other main residence. So you don't buy a house interstate or overseas, you still elect that house in Adelaide, for example, to be your main residence.
Now, if you're going to be overseas for longer than that, can you move back into it for a little while and then...
Yeah, let's say, for example, you decide to move overseas for 3 years, you travel around Europe, do some working.
Sounds great.
It does sound great, yes, we shouldn't be here working. But if you decide to do that and you move back in, and then you move back into your main residence, then you can reset that 6 years. So then you could move back in, say, for 3 months, 4 months or so. Then you decide to move interstate, pick up a job in Melbourne, for example. Then you reset that 6 years that you're entitled to rent that house out again.
How do you prove that that house is still your principal place of residence?
The great thing is that when you lodge your tax return, that's when you choose which your main residence is. So, for example, you need to obviously always keep records, and for any taxation, records.
Okay, and essentially, as long as you're nominating that as your principal place, you don't stay out longer than 6 years and you're clear.
Yes, that's right. You must elect to be your main residence.
Okay, now let's take a couple of questions that I've had over the years that I've always wanted the answers for, so let's get them. 10 years ago, and this I'm just making up a scenario here, Grantley. So 10 years ago, I inherited the family beach house. By the way, I didn't, but let's say I did, at Victor Harbour. As I've never rented it out, are there any capital gains tax implications if I sell it?
So the golden rule is if it's your main residence, there's no capital gains tax. Since it's the beach house, then the capital gains tax will apply. It does not matter if you rent it out or you just use it for your own purposes on weekends, for example. The capital gains tax will apply if you sell the beach house.
Right, okay. And just to reiterate, whatever gain you get, you pay 50% on that?
Essentially.
Or 50% goes on top of your
So let's
income.
make out you have a $100,000 capital gain.
Yep.
The capital gain, there's a 50% discount if you own the place for more than 12 months. So the capital gain that will be assessed is $50,000,
Yep.
and the tax rate depends on your own personal tax rate, but the tax rate might be 30%, might be 45%.
Right, we'll come back to a few more questions a bit later. But we want to go now and have a look at our interview with Craig James, who's the Chief Economist for CommSec, and we're covering off on some really interesting details and some facts about affordability in the current housing market.